Welcome to the Investors Trading Academy event of the week. Each week our staff of analysts and educators tries to provide you a better understanding of a major market event scheduled soon, and that will have an effect on global markets. Apple's Fiscal 2016 earnings report is now scheduled for Monday, April the 25th. Apple CEO Tim Cook and CFO Luca Maestri are expected to review Apple's January through March quarter financial results and give us their projections for Q3. In the previous earnings report on January the 25th, Apple estimated that its revenue for Q2 would be between $50 and $53 billion, and that created a stir because that's projected to be less than a year ago in Q2 of $58 billion. Observers wondered if iPhone sales are peaking since they account for well over 60% of Apple's total revenue. We're looking to see how conservative Apple was. It is expected that Apple will release the newest model of its flagship device later this year. Apple's conviction buy rating means that Goldman ranks the iPhone firm among its top recommended stocks. Goldman has a $155 12-month price target on Apple shares. On Tuesday, Apple shares closed up 1.3% at $110.44. Year to date, the stock is up almost 3%, while in the last 1 year, it is down over 13%. Apple shares have rebounded nicely since the February the 11th market low, trading at nearly $109 per share as of Friday's close. That rebound seems to have been caused by portfolio rebalancing rather than fundamental improvement. A noted AAPL analyst pointed out two huge fundamental negatives for Apple in a note late last week. Sluggish phone sales in the US and overseas accounted for the expectation for an 18% decline in iPhone sales in the March quarter compared to last year. We no longer expect Apple to return to revenue growth this fiscal year and forecast a 4% decline in revenue for the year. So Apple just hasn't been selling that many iPhones. If the shares had fallen 10% in the last 2 months, I'd say that's in the stock, but they have actually risen more than 10% in that period. So I think Goldman Sachs' note was a warning signal on AAPL, and I'd watch for more such signals in the next 2 weeks. For those who are a bit less patient, Goldman's options research team has an alternative to buying and holding. They recommend that traders buy short-term calls based on the perception of that analyst Simona Jankowski that Apple will impress in its April 25 report. The earnings event is likely to be bigger than expected positive catalyst for shares, they wrote. Specifically, in their Wednesday data report, Goldman recommends buying the 101 strike calls on Apple expiring on April 29th and Friday after earnings.